Welcome to the Deep Dive. We're here to cut through the static and give you the real story. Today, we're taking a close look at AEHR Test Systems. That's ticker AEHR on the NASDAQ. Our goal, to really unpack this company from an investor's point of view. We'll cover its business, the financials, where it sits in the market, basically give you the essential insights. And just so you know, all this analysis is current as of July 27, 2025.
Exactly. Think of this as your fast track to getting up to speed on AEHR. We're going to connect the important dots here, especially if you're considering it from an investment angle. It's about moving past the headlines, and understanding what really makes this company tick.
Okay, let's dive right in then. What exactly does AEHR Test Systems do? Well, at its heart, they design and sell systems for testing semiconductors, specifically something called burn-in testing. But here's where they really specialize and where a lot of their value comes from: silicon carbide, SIMD power semiconductors.
Right. And these aren't your everyday chips. Sagi is built for tough jobs, high voltage, high temperatures. Think electric vehicles, especially the newer 800-volt systems everyone's moving towards. And also renewable energy, like solar inverters, wind turbines, places where failure is not an option.
Exactly. So for those kinds of high-stakes uses, this burn-in testing they do isn't just nice to have, it's absolutely critical for reliability, right, to make sure these things last.
Absolutely essential. It weeds out potential failures early on.
Now, Cycus is definitely their strong suit, but they're not only focused there, they also target memory chips. NAND, DRAM, the stuff in basically every gadget, and also these advanced 2D and 3D sensors, things like time of flight, LiDAR, becoming really important for phones, autonomous driving, that sort of thing. So let's talk about their main products. Their flagship is called the FOX solution. That's their core platform for testing chips, while they're still grouped together on the silicon wafer. It's called wafer-level burn-in and test. Pretty efficient way to do it.
Yeah, testing them all at once before they get cut up.
And working hand in hand with the FOX systems are their wafer pack contactors. These are proprietary, kind of like specialized probe cards. They make direct electrical contact with the whole wafer during the test. This is key for getting accurate results, high yield. A big part of their technological edge, wouldn't you say?
Definitely. That's a core piece of their moat, as people like to say. It's not easy to replicate that performance and reliability at the wafer level.
They also have die pack carriers for testing individual chips, or dies, after they've been separated. And then there are the FTMP systems, which are also for full wafer contact, but focus on parallel testing, hitting many chips simultaneously.
So when you look at their position in the market, it's quite interesting. They aren't just another player in semiconductor tests. They are arguably the leader in CZAC burn-in testing. They've really carved out a dominant niche there.
A unique position, really.
Absolutely. And those technologies we mentioned, the WaferPak, the FOX platform, they offer performance and efficiency that competitors find really hard to match. That's the barrier to entry. Plus, they've built up strong loyalty and partnerships with the big names making Surrey chips. That counts for a lot.
So with that kind of specialized strength, what's their plan for growth? How are they moving forward? It seems pretty clear they're doubling down on Syria, right? Trying to capture that huge growth driven by EVs.
That's the main engine, yes. Selling more FOX systems and, crucially, more of those consumable WaferPak contactors that go with them.
And trying to win new Syria customers while keeping the current ones happy, I assume.
Exactly. Deepening those relationships. But they're also looking beyond Syria, strategically trying to get a stronger foothold in memory testing and the sensor markets, too. Diversification.
Makes sense.
But, what's fascinating here, or maybe challenging, is that being a leader in such a specific niche means their fortunes are really tied to Simmer's growth path. How quickly it gets adopted, the ups and downs of that specific market, it makes them quite sensitive to it.
Okay, let's pivot to the financials. This is where things get really interesting for investors, especially given recent events. How does their revenue break down? System sales, the big FOXM machines, that's the main chunk. But, and this is important, those consumables, the WaferPak contactors, the die-pack carriers, they provide this ongoing recurring revenue stream.
High margin, too.
Right. And that stream grows as more of their systems get installed. It adds a nice layer of stability, doesn't it? Plus, they get revenue from service and maintenance contracts.
Yeah, that recurring piece is really valuable. Historically, they showed pretty impressive gains in profit margins as the SIPO market took off, and generally, their balance sheet looked pretty healthy, low debt, good cash position.
But there's a caveat with this industry, right?
Yeah. There is. You have to remember, the equipment business, especially for big-ticket systems like these, can see really lumpy revenue. Big orders come in, then maybe a quieter quarter, so you get volatility. However, that growing slice of consumable sales does help smooth things out over the longer term. It's a good trend to see.
Okay, now for the really critical part.
Yeah.
The latest numbers. Their fiscal 2025 Q4 and full year results, they came out July 8th, 2025. And they caused a stir.
They certainly did.
For Q4, which ended February 29th, 2025, revenue came in at $14.1 million. Now, that was down 15% compared to the year before, and significantly, it missed what the market was expecting.
Yeah, the consensus estimate was closer to $14.8 million, a noticeable miss.
And that resulted in a GAAP net loss of $2.9 million, or a loss of 10 cents per share.
Not what investors wanted to see.
Looking at the full fiscal year 2025, revenue was $59.7 million. That's down almost 11% from fiscal 2024's $66.2 million. And the full year bottom line was a GAAP net loss of $3.9 million, or 13 cents per share.
It's worth noting, they did report positive non-GAAP income, but FY24 had some significant tax benefits that FY25 didn't, so the GAAP comparison shows the pressure.
And then the guidance for fiscal 2026, management guided for revenue of at least $65 million.
Which, while up from FY25's depressed level, is basically flat compared to FY24.
Right, and the market had been pricing in much, much higher growth expectations, so that guidance landed like a lead balloon.
It did. And the reason behind this slowdown is pretty clear, and management acknowledged it. It comes down to their major SISI customers hitting the brakes a bit. They're working through inventory buildups, and crucially for AEHR, they delayed some big capital spending plans.
Pushing out orders for new equipment.
Exactly. Those delayed large orders hit AEHR directly and heavily. It really underscores the dependence on the spending cycles of just a few key players right now.
So faced with these headwinds, what's the strategy? What's management saying? They're really pushing this diversification angle now, aren't they?
They are. They're emphasizing expanding their total addressable market, their TAM, beyond just satiety. They specifically mentioned AI processors, highlighting their new Sonoma system designed for that market and noting they've already got some orders there.
That's interesting. What else?
They're also looking at gallium nitride, or GaN, which is another type of power semiconductor, and exploring data storage testing, silicon photonics, basically broadening their horizons.
Silicon photonics using light for chip communication, right? Super fast stuff.
That's the one. So the strategy is diversification.
How did investors react to all this? The earnings, the guidance?
Well, predictably, the stock took a significant hit after the announcement. It really just highlights how much optimism, how much future growth was already baked into that share price.
So valuation was stretched.
You could say that.
Right.
And while diversification is definitely a positive long-term move, it's not a quick fix. It's going to take time for those new areas to meaningfully contribute to the top line. Investors need some patience there.
Let's quickly run through some investment metrics post-earnings. Market cap landed around $313 million. Trailing PE ratio around 21. Forward PE, based on that softer FY26 guidance, jumped up near 30. Price to sales around 4.8.
So you see the metrics adjusting to the lower near-term growth outlook.
And the analysts.
Right.
Mostly hold ratings, right? The consensus target price got trimmed back, too, down to about $16.71 on average.
Yeah, the sentiment shifted pretty quickly to cautious optimism at best. And no surprise, as a growth-focused company, they don't pay a dividend. They're reinvesting everything back into the business, R&D, expansion.
So the bottom line from the metrics is the market's definitely concerned about this growth slowdown.
Absolutely. Any rebound in the stock and those multiples is going to hinge on seeing a recovery in that core 6-day market and, critically, AEHR landing some significant new orders to rebuild confidence.
Okay, let's zoom out a bit now. Put AEHR in the context of the wider industry. What are the big trends in semiconductor test and burn-in affecting them? Starting with SICTI, because that's so core to their story.
Right. So we've established there's this short-term hiccup happening now, 2024 into 2025. EV sales growth moderated a bit. leading six makers to adjust production, delay some expansions. That's what hit AEHR's recent numbers.
The inventory correction we mentioned.
Exactly. And this is but the long-term picture for six looks very different. Market research firms like Yole Group, for instance, are forecasting a strong rebound starting in 2026. They see the market growing significantly, potentially over $10 billion by 2029.
Wow, that's substantial growth. What's driving that?
Several things. The big shift to 800-volt systems in EVs, which really benefits Sixil. Expansion into more industrial uses, think EV fast chargers, big solar farms, power-hungry data centers, and also the move towards larger 8-inch 6E wafers, which should help bring costs down and increase volume. All that requires more testing capacity.
Okay, so short-term pain, but potentially significant long-term gain in 6-seal. What about other areas? You mentioned AI testing.
Yes, that's a huge one. The boom in high-performance computing and AI chips is creating massive demand for very precise, rigorous testing. AI chip manufacturing is forecast to jump something like 44% in 2025 alone. That's a major tailwind for the entire semiconductor test market, including burn-in sockets.
And AEHR Sonoma system is aimed right at that.
Precisely. It's their play for that high-growth AI segment.
And just generally, chips are getting more complex, right? More packed together.
Absolutely. More integration, more complexity means you need more sophisticated, more reliable testing. That drives demand for automated test equipment across the board. The U.S. burn-in socket market itself, where AEHR's WaferPak and DiePak play, is projected to hit nearly $1.8 billion in 2025 and keep growing at a healthy clip, close to 9% annually through 2033, driven by AI, automation, EVs.
So connecting the dots, AEHR is facing some near-term turbulence in its main market, SiCA.
Right, that's the current challenge.
But it seems like they're strategically positioned for the long haul in SiCAs, and they're making moves into other high-growth areas like AI testing.
That's a good summary. The overall market trends for advanced testing solutions look pretty favorable long-term.
Okay, let's pull back even further. The general semiconductor industry. What's the vibe there?
Well, the good news is the overall semiconductor industry is definitely in recovery mode after a bit of a downturn. We saw strong growth in 2024, expected to be over 19%, and forecasts point to double-digit growth again in 2025. The total market is likely pushing past $600 billion.
What's fueling that recovery?
It's really broad-based. AI is a massive driver, of course, but also 5G deployment, automotive electronics, especially EVs, and the continued build-out of cloud data centers. Demand is strong.
And companies are spending to meet that demand.
Oh, yeah. Capital expenditures, CapEx, are expected to be huge in 2025, maybe around $185 billion industry-wide. Companies are investing heavily to expand capacity, especially in AI chip design, power semiconductors like Summon, and advanced packaging techniques.
And then there are the geopolitical factors. U.S.-China tensions, efforts to bring manufacturing back home, government money like the Chicky PS Act.
Absolutely. Those factors are reshaping supply chains and definitely influencing where companies decide to build new fabs and invest their capital. It's a complex landscape.
So AEHR benefits from the general semiconductor upswing driven by AI, EVs, 5G.
It does get a lift from that rising tide, yes.
But it's also very directly tied to the specific spending plans and the sometimes bumpy demand cycles within that SiCA niche.
Exactly. It's a nuanced position. They ride the big waves, but are also very sensitive to the currents in their specific pond.
All right, last piece of the puzzle, the macroeconomic picture. How does that play into AEHR's story? Things like interest rates, inflation.
Well, they matter quite a bit, even if indirectly. Look at interest rates. If they stay high, it makes borrowing more expensive for everyone, including AEHR and its customers. It can also depress the valuation of growth stocks like AEHR because future earnings are worth less today. And critically, high rates can make big semiconductor companies hesitant about pulling the trigger on major CapEx projects.
But if rates come down,
then you could see investment pickup, which would be a positive.
What about inflation? Rising costs.
That puts pressure on margins, definitely. Higher costs for raw materials, the Siskiyou wafers themselves, labor, energy, it all feeds through. Plus, inflation can squeeze consumers, maybe slowing down purchases of things like EVs, which then ripples back to SiC demand.
And the overall economy, GDP growth.
A general slowdown or recession is bad news, obviously. Companies pull back on big investments, IT spending, manufacturing, that hits semiconductor demand overall. On the other hand, a healthy global economy, the IMF, is projecting decent growth for 2025, around 3.3%, though with risk supports business investment and consumer spending, which is good for AEHR.
They sell globally too, so currency fluctuations matter.
They do. A strong US dollar, for example, can make their products more expensive overseas or reduce the value of foreign sales when converted back to dollars.
And just general geopolitical instability, US-China stuff, regional conflicts.
Yeah, that creates uncertainty. It can disrupt supply chains, lead to new trade rules, just generally make global business trickier.
But government policies can be a positive too, right? Yeah. Like the TTS Act you mentioned, EV subsidies.
Definitely. Those kinds of incentives encourage companies to build fabs and invest domestically or in friendly regions, creating direct opportunities for equipment suppliers like AEHR.
So putting it all together on the macro front.
Look, AEHR isn't selling something essential like electricity. They sell critical equipment, yes, but it's capital equipment. So they're quite sensitive to how macro factors, especially interest rates, global growth, stability, influence those big CapEx decisions their customers make. Their recent results really show that complex mix of macro pressures and specific C-market adjustments playing out.
Okay, that's a lot of context. Now let's zero in on the potential downsides. Every investment has risks. What are the key ones investors need to watch with AEHR?
Well, the most obvious one, highlighted by their recent performance, is that heavy dependence on the SEEK market. They're vulnerable when major customers adjust inventory or delay spending. Their strength is also, in the short term, a point of risk.
And the growth slowdown itself.
That's risk number 2. After years of really rapid growth, the slowdown in FY25 and that conservative FY26 guidance are concerning. If growth stays sluggish, that valuation, which has historically been high, could face more pressure. Valuation risk is real here.
What about competition?
That's definitely a factor. As the CS market gets bigger and more attractive, you have to expect the larger established test equipment giants, companies like Cohu, Advantus, Teradyne, might try to muscle in more aggressively. They have deep pockets and broad customer relationships. If they really target CS burn-in, it could erode AEHR's market share and maybe pressure their pricing power.
Their customer base is also quite concentrated, isn't it?
It is. They rely heavily on a handful of key CS manufacturers. That's great when those customers are ramping up, but it's risky. If a major customer decided to, say, develop its own internal burn-in solution or switch to a competitor, that could be a significant blow to AEHR's revenue.
We talked about macro risks, a recession, high rates hitting CapEx.
Yes, those remain ongoing risks that could dampen demand.
And finally, the risk of just falling behind. Technology moves fast.
Absolutely. Technological obsolescence is a constant threat in semiconductors. AEHR needs to keep innovating relentlessly. If they don't keep pace with new wafer sizes, new packaging methods, maybe even new materials beyond CID and GaN, they could lose that competitive edge they've worked so hard to build.
Okay, those are some significant risks to consider. So, given all that, how does AEHR actually stack up? What are their core strengths against these challenges?
Well, despite the risks, they have some powerful advantages. First and foremost is that undisputed leadership in scenic wafer-level burn-in. They really established themselves as the go-to provider for this critical process, especially for demanding applications like EVs. That FOX platform and wafer pocket combo is proven.
The technological moat we talked about.
Exactly. The proprietary wafer packing technology gives them a real performance edge that's genuinely hard for others to copy effectively, especially at scale on the full wafer.
They also have strong customer relationships, right?
Very strong. High loyalty, proven track record with the leading SanXC players. They've been in the trenches with these companies as they scaled up Santus production. That builds trust and credibility.
And the business model itself has strengths.
It does. That recurring revenue from consumables, the wafer packs, is a big plus. It provides ongoing high-margin income even after the system is sold, adding stability and boosting long-term profitability.
And they're not just sitting still, relying only on Santus.
Right. Those diversification efforts are crucial. Moving into AI processor testing with Sonoma, exploring GaN, silicon photonics, it shows they're thinking strategically about future growth and reducing that Santus dependency over time. That's a key strength.
Let's just quickly recap those core technical capabilities driving their edge. The FOX platform handles full wafer testing under tough conditions, high temp, high voltage, logs all the data.
Flexible and comprehensive.
The wafer pack contactors, essential for getting the signals to the wafer accurately and reliably.
The key interface, really.
And the new Sonoma system, signaling their move into complex AI chip testing. Shows they can adapt.
Demonstrates R&D capability and market awareness.
Okay, and internally, what strengths do they have to navigate all this? Management, R&D.
I think management is a key strength. CEO Gain Erickson has deep experience in semiconductor test. He successfully pivoted the company towards SyncC and now seems to be guiding them through this adjustment period while pushing diversification. They also clearly have strong R&D capabilities. They keep investing, improving the core technologies, and developing solutions for these new chip types. That's vital.
And those customer relationships we mentioned.
That's not just sales, it's deep relationship management. They work closely with customers like STMicro, onsemi, often tailoring solutions to fit their production roadmaps. That's a significant advantage.
And financially, despite the recent dip.
They've shown they can manage finances soundly. They improved profitability significantly during the SyncC boom and maintained enough financial flexibility to keep investing in R&D and diversification even now during this slowdown. That resilience is important.
All right, so for you, the listener, the investor, what are the really crucial things to watch going forward? What are the signals and catalysts that can move the needle for AEHR?
Number one, without a doubt, watch the CapEx announcements from their key site customers, STMicro, onsemi, Wolfspeed. When do they signal they're ready to restart or accelerate spending on new fabs and equipment? The FY25 Q4 results showed just how sensitive AEHR is to those decisions. Any news of large orders resuming would be huge.
And keep an eye on the broader psyche market trends, EV sales, adoption rates.
Absolutely. Is that short-term slowdown easing? Are the long-term growth forecasts holding up? That's the tide AEHR swims in.
What about AEHR-specific news, new customers, new tech?
Definitely. Any announcements about landing significant new customers, whether in Psycher or these diversification areas like AI, would be very positive. Same goes for major new product launches or upgrades to the FOX platform that enhance their edge.
Government policies still matter too. CHES Act, EV subsidies.
Yes, keep monitoring those. They can provide tailwinds for the whole ecosystem AEHR serves.
And the basics. Analyst reports, SEC filings.
Always. For the official numbers, management commentary, risk factor updates, the 10Ks, 10Qs, 8Ks are essential reading. Analyst reports give you a sense of market sentiment and expectations.
So it really boils down to orders and the SRAV market recovery, doesn't it?
Largely, yes, especially in the near term. Remember, this stock historically carried very high growth expectations. That means any stumble, any downward revision to guidance tends to get punished severely by the market, as we just saw. The flip side is, positive surprises could lead to a strong rebound.
Okay, let's try to wrap this up. What's the bottom line here for someone looking at AEHR?
Well, AEHR holds a genuinely unique leading position in a market SiC power semiconductors that is critical for major long-term trends like vehicle electrification and renewable energy. That's a powerful starting point.
They have strong technology, good customer relationships.
And they're making smart moves to diversify. But, and it's a significant but right now, they're clearly navigating a rough patch. This short-term slowdown in sales, combined with their heavy reliance on that market, creates risk. And the valuation needs that growth to resume to justify historical levels. It's a classic growth story hitting a speed bump.
So it feels like they're in a consolidation phase, maybe a show-me period for investors. Needs careful watching.
I think that's fair. The key catalysts investors will be looking for are pretty clear timing. When will those big orders from major customers restart? When will we see a broader resumption of CapEx in the SiC space as those long-term forecasts start to play out again? And can AEHR successfully execute on its diversification, turning areas like AI testing into meaningful revenue streams?
It's really about bridging that gap between the current challenges and the potential long-term opportunity.
Exactly. It requires patience and close monitoring of those specific catalysts.
All right. Well, as always, this deep dive is meant to inform you, but you absolutely need to do your own homework. Make sure any investment decision fits your own goals and your tolerance for risk. We hope this breakdown of AEHR Test Systems was helpful for you.